Today, I'm going to break down step by step how you can yield farm and earn passive income in decentralized finance. Let's hop right in. So briefly, we'll talk about what yield farming is as opposed to liquidity mining or farming or staking. So first of all, staking, that's when you have an asset like something like Ethereum and you're staking it into a validator and you're earning a return. The reason why people stake is to help support the decentralization of a network. The more people that are staking, the more decentralized the network is, and the more validators there are, the more decentralized the network is. But again, staking returns like 3 to 5% a year, not that good. And obviously that just depends on the asset that you're staking. And moving into yield farming, this is where we can start to generate some serious money. Typically, yield farming does have higher returns than liquidity farming. But the issue is these returns typically aren't going to be as stable as liquidity mining / liquidity farming. And the reason is that in yield farming, basically we're being paid out in reward tokens or farming tokens. And then we're going to want to take those farming tokens and sell them to earn an income. For example, if I'm about to buy a house and want to pay my mortgage with DeFi passive income, I'm going to have to sell those farming tokens that I'm paid out in and convert it to like USD, and then from there put that USD into my bank account. And granted, we have to do the same exact thing with liquidity mining. It's just when there isn't as much liquidity for farming tokens, and when you're farming for the tokens that you're selling, you're kind of contradicting your analysis right there. So you're going to need to be careful, and we're going to cover that in today's video. Additionally, in liquidity mining, this is the process of putting two assets together in a liquidity pool and strictly going for the fees that traders are paying by executing trades. So if someone is trading $100 and there's a $1 fee, you're earning 1% of that trade basically. And that is split amongst all the people that are mining for that liquidity pool. Long story short, when it comes to yield farming, we're looking for positions that can pay out super high returns and typically in a reward token that we can go and just sell. It's important to, of course, have a good strategy in place because you don't want to end up being completely burned by yield farming, because of course there are risks associated with yield farming. If you do want to learn more about yield farming, I've done content on it in the past, so drop a like and subscribe. So I'm going to head over to the site defilama.com/yields, or you can go to DeFi Llama and just click on yields. And this is essentially the site that we can use for yield farming. And when it comes to liquidity farming, we can use a tool called Metrics Finance. This is a tool that our team at Builder Wealth built. That way we can take our liquidity mining ventures even farther. And we can help institutions and retail investors as well. But this is a yield farming video, so we're not going to get too much into Metrics Finance. So when it comes to tokens, you're going to want to type in tokens that you personally believe in. So I'm going to type in Ethereum here. Something I definitely don't want to do is go deploy my capital into random pools that I know nothing about and deploy capital into pools on coins that I am bearish about or just not that interested in and don't have much knowledge about. So I'm going to put stuff like Ethereum, OVN, Render, as well as Sol. And just like that, I got some assets that I believe in. I'm only putting in assets that I think can definitely do good in the long term. So I'm going to go ahead and type in FET, etc. So as you can see off the bat, there's about 5,234 pools, which is a lot. And that would take a while to sort through. So me personally, I don't care too much about what network I'm on, but I usually like to be on the Ethereum network and the Optimism network here, as well as the Arbitrum network. Let's see, Arbitrum, as well as Base. Here we go. And then I'll do Solana and Polygon. Let's go. Polygon. I guess I'll add this one as well. So look, now we're already at 4,786 pools. So we scratched off over like 300, 400 pools. In terms of projects, I'm not going to put a filter. I don't care too much about what project it's in. But of course, you're going to want to do due diligence for what project these pools are on and make sure that they're safe and make sure you're not investing into a rug pull or something similar. But in terms of this discovery section, I'm just going to leave it open to all these projects. But when it comes to category, here's when I'm going to start selecting some certain things. So I'm going to go ahead and clear all the filters. So I'm not going to select liquid staking or lending. I'm going to go all the way down to where I see Dexus and then yield aggregator, yield. Then I'm going to go to leverage farming. This is a bit riskier. If you don't want to include that, feel free not to. And then I'm going to go all the way down to farm. Where is it? All right, right here. And now it's at 4,226 pools. All right, we're getting more narrow. All right, then when it goes to attribute, I'm going to go ahead and check stable coins because I don't really care too much about mining stable coins. All right, so now we only have 3 pools. Now I guess while we're here, we can go ahead and analyze and think, do we want to deploy into any of these? From the looks of it, doesn't really look like I'd want to deploy into any of these. So I'm going to go ahead and uncheck this. I'm going to go to audited and outliers. By checking no outliers, it will factor out those coins that have like super high returns that just don't make too much sense, that might seem like a scam. Also, we're going to check stable outlook right here. This is important to me because it looks at pools that have a stable APY as opposed to one that goes up from like 10% one month to 65% the next month, you know, etc. These are pools that have a predicted high confidence. Then just like that, look, we have 443 pools. So we burned off thousands of pools. It's getting much easier to search now. But still, we're not done. I'm going to go to TVL and put a minimum of $10 million. Now this is going to show me pools that in the TVL section have a minimum of $10 million or above, so this is great. So if I sort by this 30-day average APY over here, you're going to see that the top return is about 12%. So that is not too good. So what we need to do is go ahead and adjust some things. So I'm going to change that $10 million to $1 million. Remove a zero. Here we go. Now 30-day average APY, the top is 24%, 23%, 22%. See, there's some higher ones. Now with yield farming, we're looking for higher returns. So what I'm going to want to do is go ahead and clear all my attributes to see what it comes up with then, because maybe the attributes are affecting this. As you can see, we have some that say like 3,000, 2,500%. Obviously, that's going to be some of those outliers, but we also have some in the hundreds. Remember, with yield farming, we're looking for higher returns. We're not looking for those with like 20 or 30% because we can do that with liquidity mining. And honestly, that's just a much more safer bet. So now I'm going to go over to attributes and go ahead and select no outliers. Where does it say that? Right here. Perfect. So it looks like we're getting some decent, pretty solid APYs. Base APY 87%, 86%, 30-day 54, 32. But let's not check that. Let's go and let's try audited right here. All right, sort by this. Oh, wow. These are very high again. So now that we have some really good returns, we're going to keep that one checked. So really what I'm doing here is trying to add as many attributes as possible to make them more like safer in my eyes. But at the same time, I'm not trying to find APYs of like 20, 30%. I'm trying to find some that are much more. And I want to find pools that have good returns with most likely a stable outlook. So I'm also going to try stable outlook. When we do that, we still get some stuff that's closer to 100, but not quite 100%. Well, this one 30-day has 152%, but the base is 81%. So for now, I'm going to uncheck that and I'm going to check high confidence. Wow. As you can see with high confidence, even with this filter on, we have a lot of pools. So I think I'm going to leave high confidence checked. So just like that, I'm going to keep it at audited and high confidence. And this is going to show us about 303 pools. This is again significantly down from the initial over 5,000 pools. So again, now we can go back to playing with TVL requirements. I guess I'm going to go to about 5 million. Start with their minimum 5 million. All right. I'm going to sort by high APY. See, still got some really solid returns going on here. A lot of them are on Aerodrome, Uniswap. 5 million could be a bit of a push, so I'm going to try 2,500,000. Here we go. Really, I just don't want to look over 200 pools. So here we have tracking 164 pools. All right. Just like that, we have a ton of pools. Definitely could be some solid options. Uniswap, Pendle, any Aerodrome? No, I do not see any Aerodrome at the moment. As you can see, there's a mix over the red and green. A lot of these APY charts are red and a lot of them are green as well. Looks like almost half and half. Maybe more are red, maybe like 60% red, but mainly because the overall crypto market is down and there's not much activity, it can cause these red graphs. So remember, here we have assets that we want to invest in, but since we have Ethan, it's going to show us a lot of random assets that are paired with ETH, like random coins. So we have ETH and Frex here. So the thing is, I'm actually going to take ETH off at the moment. The reason why is it's just showing me way too many pools. So now it says tracking 8 pools. So this one over here, sold to USDC over on Francium. This definitely doesn't seem too bad. It says 96% 30-day average APY, and regular APY is about 96%, same thing. Doesn't seem too bad. It has a TVL of almost 7 million. And then again, I'm not really sure why these are being included, because you can see Puff, ETH, and when I don't even have ETH on here or this token. So some of these just somehow made the list. And look, we have OVN USD over on Aerodrome. It says 238 reward APY and 30-day average is 206%. And some of these right here, like these that somehow got on the list, APY does not seem good, 1.90 or 2.5%. So really our options are OVN to USD Plus or this SOL to USDC. So obviously we need to expand at the moment. So I'm just going to go ahead and uncheck these assets. All right, 240 now. So now I'm just going to go full on and say, now that I found those 1 or 2 that I really like, which is that full to USDC, as well as the OVN one, we got 2 good options, 2 good candidates on that we can do further due diligence on. You can look into the coins and the projects and to see the news about it and what they're really about. But now that I unchecked all the assets, we can see, okay, now I might want to expand to some other assets. So in this scenario, we go back to having about 240 pools. I see a lot of stuff on Aerodrome. I see this one ETH TKN doing 222%, as well as ETH Wells doing 299%. Keep in mind that these are over on Aerodrome. So what I'm going to do is go ahead and pull up these tokens over on Dex Screener. So TKN ETH. This is essentially going to show me what the token is. I can scroll down, see much more info. See, token DAO. All right, it says the token name service is a decentralized token tracker and global asset name service. So if I head over to the website, what it basically is it seems like it's like CoinGecko. It's just like, or CoinMarketCap, but it's just decentralized. So I'd really really want to see what role TKN token plays into the ecosystem. So that would, number one, determine if I even want to deploy into this position and determine how much money I'd want to put into this position. So usually in the documentation section, you can usually find a lot of this info. Here we have an overview, etc. And if you can't find it in the documentation section, then maybe, just maybe, it's not something you're going to want to get into. Reason being, it's not too clear of what reason TKN or token DAO is being used for. We can do the same thing for Wells. We just pull it up. Wells, okay, Wells ETH. And this is for the, let's see, wrapped ETH last token. We can go to their website. So if we head over to the Wells website, it will tell us some information about Wells as well as what it actually is. Now, off the bat, I don't see much information about Wells. I see some leaderboards. That's something I'm going to want to keep in mind. But from there, I can head over to the documentation in the bottom right, see some more information. Off the bat, you can see that it's already some sort of gaming platform. I'd really want to see what role does this token play in the ecosystem. Like, does it actually have a good role to the point where it can make me money and where it could grow in value, or is it more of just some sort of incentive token or some Ponzi type thing? And if it's one of those, like some Ponzi type thing, then I probably don't want to deploy into it. And I'm not saying that this is one of them. I'm just saying, just do your due diligence. That's really what I'm trying to tell you. So overall, this is how I would actually identify these different yield farms. And then the next thing I do is do my advanced research, do my due diligence, and understand all the risks associated with these liquidity pools. Remember, I'm not a financial advisor. I'm not telling you what to do with your money. I'm just showing you a way to start yield farming if you're interested. So also my next steps would be to create an allocation sheet and actually list down how much money I'd want to allocate to each position. And then as well, I'd also write down how much money I'm also investing into each individual platform. It's important to take it with a business approach and make calculated decisions. If you guys did enjoy this video, make sure to like, subscribe, and post notifications on, and I'll see you in the next one.